Hello and welcome to Pro Trader Strategies Market Commentary for Friday, October the 14th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data across the pond in the form of construction spending coming out of Great Britain, pulled back a bit to down 1.5%, was supposed to be expected to be unchanged. Here in the United States, though, we got core retail sales spiked a little bit, not a ton, but up 0.1% to 0.5% from the expected 0.4%, but it's up a bit from the last reading, which was -2 or 0.2%. So we also got PPI, which is Producer Price Index, came in slightly higher than expected at 0.3%, and retail sales, which includes autos and things of that nature, came in line with expectation at 0.6%. We also got core PPI, which is the Producer Price Index, again slightly higher than expected, up 0.2%, expected 0.1%. One thing to note, we did get also business inventories, which usually isn't that big of a thing, but it came in a little bit higher than expected at 0.2% versus the expected 0.1%. And the reason why that came in a little bit higher is we're starting to see retailers start to boost their stock inventories ahead of the holiday season going forward. We also saw Ulta yesterday revise their earnings expectations up quite a bit, and we could see probably quite a few of these, maybe even Bed Bath & Beyond, some of these other ones doing quite well heading into this here holiday season. So it's looking like things are starting to pick up a little bit here in the United States, at least. We also have Rosengren speaking today, who is an FOMC member, and Chair Janet Yellen speaking as well, but that's a little bit later today at around 1:30 Eastern time. So keep your eyes out for that. The overall markets, as you can see here, with crude oil is down. The equities were a mixed bag a little bit earlier, but we got crude oil down just slightly at down 36 cents, but still in that $50 a barrel range. But noting that it is below this value area high. It traded up and tested that yesterday, traded up and through it today, but is now back down below again. We saw those crude oil inventories yesterday come out higher than expected for the street anyway. I've been talking about we're going to start seeing some of this crude oil come online that was being disrupted in the Gulf. Gold futures just down slightly, down to almost $1 right now, $12.56, but trading, finding its range. You know, some people could look at this as being a flagging type of situation where then it could snap back down when it starts flagging out like that after a big drop. You could see another big drop. Hoping not to see that just because I have it on a strangle on that market. It's not working out too well. Anyway, on to the bonds, which is down 19 ticks on the day, but above the 50 Fibonacci level. I've talked about this several times. It's going to find some comfort right in this area here. So I don't really expect it to see a whole lot of movement. And then on to the Dow Jones, up 46 points, but coming off well off its highs. Did go up and test that 50-day moving average, but the 9-day is still below that 50-day moving average, which is bearish for the near term. On to the Nasdaq /NQ, up 7 points on the day, but again, not doing too well as of lately. It's the overall equity markets are starting to slide, and this is another situation where I talked about when you saw these two yesterday, that started looking like it could be a continuation pattern. Today we snapped up really started looking like it was going to be confirmed as a near-term bottom at least. But the way the market's reacting right now, it's looking like a continuation pattern again if we were to settle here where we are at this point in time. Same thing with the E-mini S&P. We're getting that same type of structure on these. It's really not giving a whole lot of insight as to our direction, other than the 9-day is below the 50-day, which is bearish for the near term for that matter. But the E-mini S&P is up 0.75 right now. As you can see for the day session, we are on the lows of the day. They may be just looking to try and print the overnight lows and then maybe rebound from that. But at this point in time, this is where we were trading overnight. Market opened up a little bit higher, rallied to new highs off of the economic data points, and it could even be where we saw Rosengren talking about the possibility of raising interest rates. Yellen, we might see that echoed just with the latest economic data points that we've been seeing lately. So the equities could throw a tantrum here relatively soon. So in that, looking at that happening, I went into the SPY. I needed to add some short deltas anyway because I'm pretty bearish anytime we get up to these highs that we're seeing. And I did the November, sold the 212 and bought the 215 put spread. So it's a debit spread, and I paid $1.15 for that. So I'm looking for a near-term pullback in SPY. It's not a really wide one, but if we can get down there where we saw yesterday's lows, that would make that debit spread look pretty nice. So that's what I'm looking for that one. One thing I did forget to mention, that yesterday, late in the day on Wednesday, I did get out of my Lilly. So actually it's better if you stayed in this and or followed me on this trade. And I had on, for Lilly, I did the I had on the October 82.5 calls, and it was the October 82.5 calls. I originally sold for 59 cents. I bought them back for 29 cents. On Wednesday, late in the afternoon, got hit on those. Today, they are probably trading closer to a nickel, so a nickel or a dime. So you've probably done much better than I did. I took it as 50% of my profit. I actually put that in earlier on in the day, and not thinking I was going to get hit. I think it was trading around 45 cents, got hit late in the day on my 29-cent bid. So if you held on to that, good for you. You did better than I did, but I stuck to my rules and got out for 50% of my max profit. Today we're going to be doing a webinar on the strangles, and you know that's probably one of my favorite strategies to implement. And then we're going to kind of stretch this out. We're going to be doing long strangles next week, and then I'm going to build it out into the iron condor and look at how we can do that in different types of scenarios, because it is one of my favorite strategies to put on. All right, so that's all I got for you guys today. Go to ProTraderStrategies.com and sign up for that. It should be a really good one. And if you can't take that, take it easy.